This is the briefing for Friday, December 19th. The stock indices continue to trade in a rotational pattern in basically multiple time frames. So you can see here, this is the spiders on a daily basis representing the S&P 500. And you can see the rotational pattern that's occurred. And this is the second degree rotational pattern at the upper extreme of this rotational pattern. So far we've been unable to break out. And you can see that the longer it stayed at this extreme, the more difficult it was going to be for it to break out, with the internals really not confirming it. You can see the internals, the breadth was continuing to decline as it tested this upper extreme, and net volume, up volume minus down volume, continued to decline as well. We did get a volume increase on the rotation to the downside. But basically, the indices, at least the S&P 500, are not showing enough strength from an internal perspective to break out to the upside. Now, it's always important to keep in mind that that can change. There's a higher probability that price will correct to the internals, but there is also a smaller probability that can sometimes become the greater probability that the internals will correct to support price, and that typically happens around a news event. Just to keep that in mind. In the Qs, basically the same thing. You can see the rotational pattern that they've been in, not quite able to test this upper extreme. NASDAQ really showing some weakness, and you can see the rotational pattern right here before we saw this breakdown. Look what happened with market breadth in the NASDAQ and net volume in the NASDAQ as all. We did have an explosion of net volume on Friday, but it was also option expiration day, so that skews volume as positions are wound down and covered going into option expiration day. And in the Russell, you can see the Russell tried to break out. It failed, and of course we got this rotation back to the downside. Breadth and net volume also declining in the Russell as well. Now, there is one positive, and if you understand what Dow Theory is, and I'm not going to explain it in detail, but Dow Theory basically says that if a trend is going to be strong in terms of the Dow Industrials and the Dow Transports, that they have to confirm each other. That you will see if you see an increase in the Dow Industrials and the Dow Transports are increasing also, that is that's the Dow Theory, that you're going to see a continuation of the move to the upside or to the downside, depending on what it is. On the other hand, if one of them diverges, then that suggests that there may not be some strength in the market, especially if it happens to be the transports that are diverging. But you can see here, this is the Dow Industrials represented by the diamonds, the DIA, and this is the Dow Transports represented by the IYT. So you can see that we basically have a confirmation concerning Dow Theory that the rally basically will continue. The ETFs representing the S&P 500, the NASDAQ, and the Russell are not confirming this. So we do have an intermarket divergent, but if you're a Dow theorist or you believe in Dow Theory, this will be a very positive event to see this continue, where the industrials and the transports are confirming each other. Now, in terms of the short term, the hourly chart of the spiders, you can see this rotational pattern from Thursday and Friday's trading held. The Qs on an hourly basis, you can see we had this breakout right at the open, and then an extension up. But look at volume, what volume was doing, look at what breadth was doing. But the one positive is net volume was increasing even though volume was decreasing. And the same thing with the IWM, that it stayed within the rotational pattern of Thursday in Friday's trading. So watch these areas carefully. Watch for a break potentially of 251 in the Russell to the upside. Watch for a break outside of this area, or the high of Friday. And that would open up a potential test of 620. Breaking below 613 would suggest that it's a false breakout, and we're going to see rotation back through the range. About the 680 area, 681 area in the spiders would be a breakout move, and then of course support comes in at the 675 area. Looking at where we are in terms of overbought and oversold, we're neutral. This is the NYSE, so it's neutral. That suggests that also that you can see the indicator is tightening here. That suggests the potential for a breakout move in one direction or another. And then of course the NASDAQ is slightly overbought, but not really so, but not really converging like the other, like the NYSE is. So this basically gives the indices the opportunity to go in either direction. Now, this week coming up is going to be a very slow week, especially as we get towards Christmas Eve on Wednesday. I will pick this briefing back up on Monday, but then I'll determine whether I want to continue this for the rest of the week based on whatever volume we see coming into the market. So I'll pick this back up again on Monday, and let's see kind of what happens on Monday. But so far, I don't know for most of you, but it's been a good trading year, and hopefully we'll see this carry through for the next upcoming new year. Have a great night, and I'll pick this back up on Monday.